Israel has many faces. It is the desert and the mountains. It is both the West and the East. It has rich history. And it is the startup nation. But from wherever you look, Israel today is a place of innovation, progress, leadership, and globalization, with one of the most powerful economies in the world and an attractive capital market, advanced international standards, cutting-edge investors' protection, deep and evolved traded bond market, unique dual listing regime, pool of leading international companies, and the leading high-tech industry in the world. Now is the time to be a part of a place that faces the future of the world. Israel Capital Market. Local is global.
Shalom and welcome. I am Ron Klein, Director of Business Development at the ISA, the Israeli Securities Authority. Thank you for joining us today for this special live broadcast discussing trends in the globalization of financial markets and how the ISA has and continues to help position the Israeli market to capitalize on these trends. COVID-19 has put us in the unconventional and, to be frank, slightly awkward position of utilizing new formats and mediums to engage with our industry, both at home and around the world. But we adapt or we perish, and this very challenge leads us nicely into our topic of discussion today. We have all become profoundly global creatures, from video chatting with grandma on separate continents, to media, entertainment, and consumption habits, to travel, hopefully again soon, and even to placing a purchase order on the stock market using a small glass rectangle. Over the past few months, it's gotten easy to forget that globalization means more than just pandemics, trade wars, and immigration debates. This is a profound and lasting force which has greatly impacted the capital markets. Markets themselves now face competition from foreign counterparts. Companies can choose their listing venue from an ever-expanding global menu or opt to list on more than just one market. Investors can now consider the values and risks of backing listings and investing across multiple markets around the world. In short, global players interacting across multiple planes on a global stage. Naturally, challenges and opportunities abound, but navigating this dynamic landscape can be a daunting task. To help orient us, I spoke earlier today with Mr. Ed Cook, Global Head of Liquid Capital Markets and Corporate Solutions at BlackRock. Ed shared with us from his valuable experience on this complex topic. Let's take a look. Hi, Ed. Thank you for joining us.
Hi, Ron. It's a pleasure to be speaking with you today, as well as the people listening on us.
So, Ed, just to get us going, what do you think have been the most significant implications of globalization for capital markets?
Look, I think it's interesting when you look at the long-term history of the capital markets. Companies, used to be financed in their local markets, very often in local currencies by banks and their local capital markets. So what we saw was the depth of availability of finance across these markets very, very differently. And the competitiveness of companies was really determined by the cost of capital in these local markets. So with the rise of globalization, we saw a corresponding rise in the international flows of finance. And this has meant that companies' competitive advantage became less about the cost of capital, but more about things like their productivity, their scale, their technological advantages. So if you look then now over the last 10 years, what we've seen is a huge compression in the returns of risk assets. And that's been the result of the unprecedented amount of central bank action we've seen through quantitative easing. And what this has caused is an increase in competition for growth. And you see that in the valuations of tech companies that are listing at the moment. But that's also mobilized capital that used to be local that's now less inhibited about being deployed internationally.
So picking up on the point of regarding choice of markets, what in your view would be the main consideration for a company when deciding on an IPO venue?
I mean, it can be several things. Some people choose a particular market because there's a group of specialist investors that understand the sector in which that company operates. So historically, companies have looked to the London markets as a center of expertise for the resources sector. And more recently, the United States has really been seen as a destination for technology and biotech companies. Some of these decisions are driven by the valuations they feel that the companies can achieve in the different markets. But also, I think some of these decisions are driven by cost. Some companies might not want to incur the additional costs of, having to adhere to international accounting standards to be listed on an international exchange. But also, if they're smaller companies, they might want to, be listed on a junior market, which are less regulated, but still provides them some access to the capital markets. So, one might also focus on the types of investors. So, if you're looking to build a relationship with. So, if I give you an example, in Europe, the average holding of a European mutual fund is about 2 years. In the United States, it's about 11 months, and in onshore China, it's less than 3 months. So the listing decisions will also depend on, what you're looking to do in the capital markets. So there's a very big difference if you're trying to raise $100 million versus $1 billion.
Well, this is very interesting because what strikes me as remarkable is that today, beyond the possibility of choosing an IPO venue, companies can even choose to list on multiple markets. What would you say are the primary motivations for such a decision?
Yeah, so listing on multiple exchanges normally comes with, additional considerations. It normally means you're complying to two slightly different rule books. But what's interesting is that despite starting this conversation talking about globalization, what we've seen with the recent US-China trade tensions, as well as the increased nationalisms that we've seen across many countries, both in the developing and developed world, we're starting to question reached peak globally. And the COVID pandemic has also revealed certain frailties around things like supply chains and has further stirred these sentiments. So when you see foreign firms that are listed on international exchanges, you might want to insulate themselves again around these sort of either intended or unintended changes to listing rules that might mean that they might not be able to be listed on that primary exchange going forward. So what we've been seeing in Hong Kong is that several mainland China companies are listing on, are putting secondary listings in Hong Kong. Should their primary listings in the US come into doubt.
So in the context of our experience here in Israel with the dual listing framework, would you say that the ability to remain subject to only one regulatory framework would be significant to a company's decision to list on a second market?
I think so. In recent years, you're starting to see a substantial growth in localized technologies and regulation that power financial enablement. And so, in fact, we're seeing the importance of having a global reach, but a presence in our local markets. And the same can be said for companies in the markets that they serve, as well as financial institutions such as ourselves. So I think that the solution that you've devised lowers the barrier to entry and reduces the incremental cost of being listed. One of the important tenets of having a strong local market is the diversity of choice. So I would hope that your solution provides a good entry point for companies and funds that want to access the Israeli market. It's also a great stepping stone for developing a more localized presence. I'll give you an example. BlackRock over the last two, listed 3 ETFs on the exchange and is regulated by the ISA. These are products that you can buy in New York or the Netherlands, but we feel it's important to have a local presence in the market. So as I said, I think what you've devised. So as I said, I think it's a very good stepping stone.
Ed, thank you very much for the interesting conversation and insights. Ed's valuable insights underscore the complexity of the challenges and opportunities created by globalization, from the company's standpoint and its specific considerations to global macroeconomic conditions. There are many moving parts to take into account. The ISA was among the first in the world to recognize the importance of taking an active stance on this issue. It was clear to us that the local regulatory environment constitutes an important part of global players' decisions. And so, we've made addressing global concerns a strategic mission as part of our mandate to protect and promote the interests of the Israeli public of investors. So, how do we go about doing this? Well, first and foremost in the ISA's globalization toolkit is the dual listing framework. Initiated by the ISA in the year 2000, this unique, groundbreaking framework allows companies traded on specific stock exchanges around the world to list their securities on the Tel Aviv Stock Exchange as well, while continuing to be subject to the regulatory framework of the recognized foreign market. This means that the Israeli securities regulation takes a step back to accommodate foreign regulation it deems sufficiently protective, so that the dual-listed company can have 2 markets for the price of 1 regulatory framework. Dual listing is currently available with the New York Stock Exchange, NASDAQ, Toronto, London, Singapore, and Hong Kong stock exchanges. Simply put, this means that for a company, or even an ETF, traded on Wall Street, it is possible to add Tel Aviv as a trading venue based on its existing compliance with the SEC disclosure and reporting obligations, and even raise additional capital or debt in Tel Aviv based on its existing foreign prospectus. Thinking back to our conversation with Ed, this is no trivial matter. And indeed, companies report many benefits in dual listing. Adding an additional market not only allows for diversification of the investor base and access to new capital, it also offers the improved overall liquidity so vital to companies today. Trading on a smaller market also means dual-listed companies get to be the bigger fish in a smaller pond, which leads to enhanced traction with local institutional investors and likely inclusion in TASE's flagship indices. Since its adoption, this framework has been a resounding success. 56 companies are currently dual-listed on TASE. These companies are naturally more global and possess a larger market cap, which explains the fact that in terms of market cap, they comprise more than 40% of TASE and its flagship indices. Interestingly enough, on average, about 40% of the trading volume in these companies is actually conducted on TASE, which speaks volumes as to the value they get from dual listing in Tel Aviv. Incredibly, the Tel Aviv Stock Exchange is actually the 4th largest exchange-traded bond market in the world in terms of trading volume, a fact that has prompted many dual-listed companies to take advantage of the favorable conditions of the Israeli fixed income market and issue bonds that are traded solely in Tel Aviv. The success of the dual listing framework hasn't made us complacent. If anything, it has proven the positive impact that measured, forward-thinking regulation can have on investors and companies. It motivates us to continue thinking creatively about how regulation shapes and affects markets from a global perspective. As the engine of technology and globalization races forward, we at the ISA are highly committed to setting the stage for the Israeli capital market to keep pace. We firmly believe that an active, diligent strategy for effectively addressing global trends is a vital part of our mandate to protect and promote the interests of the Israeli public of investors. With the extraordinary success of the dual listing framework and plenty of new initiatives already in full swing, Israel remains well placed at the forefront of globally connected capital markets. My thanks again to Ed Cook and to you all for being with us today. To contact the ISA for more information and opportunities for collaboration, please see details posted in the comment section. Live from Jerusalem, we wish you and yours health and prosperity. This has been Ron Klein for the Israeli Securities Authority. Goodbye.